Ciao guys, welcome back to Lorenzo to Sense podcast, and today we speak about Nebius. Will it be killed by Chinese models, Chinese open source models? Let's go through this Q4 update after the earning release of last week. So, first of all, what's the most important sentence that I heard in the earnings call and from the shareholders deck? Demand from enterprises and AI native customers continues to outpace supply, allowing us to sell future capacity well in advance. This, guys, is what we want to hear from any AI infrastructure company. And actually, we heard something similar from Microsoft, Google, and Amazon, and everyone is in this business. So that's very good. We want to hear this every time these people speak, right? Because it means that the AI super cycle capital expenditure is continuing. Okay, so let's go through the update. Nebius reiterated a very bold target, an analyzed revenue run rate of 7 to 9 billion by end of 2026. So ARR potentially of 9 billion. That is a lot more than what they do now. And the management sounded even more confident that they were when announced this target 3 months ago, right? So this is a future confirmation that this is playing out. So demand is very strong, and so here is my main narrative. Chinese open source models are a big underrated tailwind for Nebius. So they are not going to kill Nebius. Actually, they are going to make Nebius fly even more. So I think too many people still look at AI compute as a generic commodity. So GPUs are GPUs. That is a shallow view. The deeper view is the winners will be the companies that can turn GPUs into the cheapest, most reliable, most scalable token factory. All right? Tokens are the new unit of production. So no seats, no licenses, not cloud instances as we think about them today. If the next decade is built on agents, copilots, and AI native apps, then the world will buy tokens, not software seats. So at the end, everything boils down to customer value delivered per token. Now, what changes the economies of tokens? Models, and specifically high quality open source models that keep getting better. This is where China matters. Models like Kimi K2.5 and Minimax M2.5, this latest one was out, I think, a few days ago, are part of a trend. Open source is not second best anymore. It is getting dangerously close to the frontier. Sometimes it is better for specific tasks and it is improving fast. So, of course, frontier model leads, but the frontier model that you have today, that it's enough to deliver value, you will most likely, this is what has happened so far, have an open source model that is the same powerful in 3 months or 6 months, but it's more 3 months than 6 months. We are seeing this. It's models are coming out every week now and are taking the lead, right? So that creates a massive tailwind for companies like Nebius because open source reduces pricing power at the models layer, right? So if you are even a premium model, closed model, you can likely not afford, and this will become more and more true, to do too much margin on this, because you have a model that maybe an open source model that maybe is not good enough, is not good the same, but it's good enough, right? So they will be obliged to lower margin. Second, open source shift value to infrastructure plus delivery. If the model is not locked behind a single API, customers care more about performance per dollar, latency, uptime, scaling, security, and enterprise controls. And third, open source increases experimentation. When costs drop and restrictions drop, more startups build, more teams deploy, and usage grows faster. Think about open cloud. No? There are a lot of people that are experimenting. A lot of them, most of them, are not delivering any value, of course. They are just using it, I don't know, to read the email from mom. That's fine for experimenting, but look at this from a different angle. You could not do it. I mean, I tried myself, and Opus and Sonnet are very good, very effective, but I burned like $30 in one day. So you cannot do it just for fun. So what I did, I am using Kimi K2.5. There are people that are buying Mac Studios and putting a local model there, so they don't need to spend any more for APIs. So this is possible thanks to open source, and this is just at consumers level. So think what this could lead with in the business with enterprises or startups even more. So Nebius is positioned exactly where this value migrates, the production layer. Nebius can say, bring your model, we will run it better and cheaper. And this is token factory thinking. Token factory is the service that they launched recently, right? So it's about inference. So robust performances are at the cheapest price. It's not a slogan. It is a strategy. When models become more open, then competitive game becomes brutal. The buyer has more options, switching cost goes down, and margins compress for undifferentiated providers. So the infrastructure provider needs a real edge. Better software stack, better orchestration, better reliability, and cost discipline. Nebius is not trying to be a GPU landlord. They are trying to become an AI hyperscaler. And that is very important difference, right, with even other neoclouds. So AI native customers are becoming real enterprises, and that is the pipeline. Second most important thing I heard in this call was this part, and I am quoting here, the management. AI startups are quickly evolving to real enterprise scale customers with revenues from their products resonating with real customers. Their demand quickly grows from hundreds of GPUs to tens of thousands. This is already a range the market saw from the biggest customers last year. And then they give an example. There is a lot of customer from the sector starting with Cuckoo, Cursor, Rodo, Hackfields, and so on. So they cite some name of startups that are their customer, and they all have their first traction, and they are becoming, as we speak, becoming real companies. Actually, it's the future enterprises. This is the biggest long-term reason I'm invested in Nebius, and this is actually this is meaning not only for Nebius but for all this sector, because if AI startups are growing and becoming enterprises, this means that AI is real. These are the next enterprises. I mean, enterprises will be at least part of them disrupted, no? So the next mega companies will be AI native. Many of them are being born right now. The demand curve is not linear, it is explosive. So this is what will drive Nebius growth mainly. And if Nebius becomes the default cloud for these winners, the compounding is insane. And I think that's the case. We are seeing this. They are already now. Nebius is not compute for hyperscalers. Nebius wants to be the hyperscaler. I repeat this because this is the core of my thesis. So most neocloud companies survive by selling big deals to hyperscalers. They are basically a supplement, a pressure valve, or a short long-term capacity partner. So when people get excited about, oh, Iron got this deal with Microsoft, Iron got that with whoever. Yeah, guys, it's good, but you cannot, I mean, this could go away at any point in time, no? So Nebius said something that shows a different mindset. I'm quoting here. Based on the traction we are experiencing and our extensive research on our total market opportunity, we are leaning into the verticals we have already laid out: healthcare, life science, media and entertainment, physical AI, and retail, which give us ample runway to capture, share, and grow our business. And this comes the interesting part. While we are happy to service large strategic customers like hyperscalers, we will remain opportunistic with such large deals as we look to balance the opportunity with the long-term positioning we plan to achieve with our AI cloud. So what they are saying is that we are focusing on real customers, end customers, not hyperscalers. Hyperscalers is good to scale. We will get them. So, and this is exactly what you want. So hyperscaler deals are not the oxygen for Nebius. They are gold opportunities if the economics are good and if they help scale faster. That's a huge difference versus competitors. Building the software moat, Tavily acquisition, and the developer platform direction. So if Nebius wants to be an hyperscaler, it cannot only be hardware and data centers. It needs software. I said it, I repeat it, it needs a platform developers love. This is why the Tavily acquisition is interesting. And I'm quoting them again here. Tavily is an agentic search company. They connect agents, AI agents to the web, and it is very much fits with in our strategy to become and to be platform where all the AI developers from startups and enterprises building their AI application and agents. Then they keep going. In addition to our organic roadmap, very important, we take a product-led approach to expanding our tech stack and tech talent with M&A, merge and acquisition. The acquisition of Tavily, announced this week, expands our AI platform with market-leading agent search capabilities. This gives Nebius customers the critical infrastructure they need to build autonomous agent that can navigate the web, verify facts, and execute complex real-world tasks, while eliminating the need for developers to patch together disparate vendors. So they are trying to get everyone stuck on Nebius token factory. I like this because it is consistent with the token factory idea. Tokens are not useful alone. Tokens are useful when they become agents that act, apps that sell, workflows that replace labor. And Tavily is part of the enablement layer that makes Nebius sticky. Enterprise adoption. I'll not go too much in detail here, just to say that they have a clear roadmap to make their cloud appealing for enterprises. And I said it, I say it again, it's very important that Nebius start acquiring more and more enterprises company. We want Nebius to be the standard preferred cloud option for AI startups, but even for enterprises, because this is where the AI can deliver value, right? So what are my takeaways? My core takeaway from this quarter is simple. Demand is outpacing supply. Nebius is scaling capacity fast. AI native customers are becoming enterprises. Nebius is building a software moat with acquisitions like Tavily. And last, Chinese open source models are an underrated tailwind because they accelerate tokenization and commoditize the model layer, pushing value into delivery. If Nebius If Nebius becomes the best token factory for robust performance at the cheapest price, then it is not a neocloud, it is an emerging hyperscaler. And that is exactly why I'm in here. As always, my deep dive to date performance, so the performance of my position in Nebius since when I invested, and I said it publicly, I bought on July the 28th of 2025, last year, at $51, and I'm up 90% to date. Okay, that's it, guys. So, as always, if you want to get even a deeper understanding and deep dive on the matter, go to lorenzo2sense.com and read the full article, where there is even a deeper section on exactly what's my strategy here and what are my considerations about valuation and my business ontology, my portfolio strategy for the premium members. So go check the article. And that's it. Until next time. Ciao, guys.